All right. Good morning, everyone. Welcome to the TradeStation Masterclass. For those that know the masterclass, my name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. We try to create content to help you not only understand certain more complex concepts in the markets, but also learn a little bit about our technology and how you can use it to trade all those markets. So I want to appreciate the time that you guys have taken out of your schedules to be here and learn a little bit about futures, which is our focus today, futures and options on futures. Our guest speaker today is Brandon. You see him on camera at the moment. We'll pass the microphone over to him in just 1 minute. I just have to go through some of the introductions and some of the disclosures that are necessary for this class. This class in particular is part of a series. In fact, this is lesson number 6, which completes our 6-part series on futures spreads and futures options. If you haven't attended one of our prior sessions on this series, I'm gonna link to those webinars right here in the chat in just a moment. I just have to look for the link of those where those webinars are, so you can see the whole complete series. This one today is titled Practical Application with Futures Plus. So we are going to take a look at the Futures Plus platform. If you're not familiar with Futures Plus, this is a platform that TradeStation provides in order for you to trade future spreads and futures options. So it's separate from the TradeStation desktop, and it's a different account that you would open up if you want to trade regular futures. So there is a little bit of setup that you have to go through in order for you to trade on Futures Plus. Some of you may be already aware of the process and maybe trading on Futures Plus already. But if you have any questions about the account opening process or what is required, make sure that you communicate with me over here in the chat. I'm going to be here throughout the presentation to make sure that I answer any questions you guys have. One thing that we have to point out is that every symbol and idea that we talk about here is for educational purposes only, that these are not recommendations of TradeStation, and also that active trading is not suitable for everyone. If you need information about these disclosures, go to www.tradestation.com/important-information, which is that link right you see right there on the top. And I also have to make a parenthesis and say that Brandon Wendell, even though it's a pleasure to have him here speaking to you, he's not affiliated with TradeStation, but he is a great trader and educator, and we can benefit from his expertise. So thank you everyone for being here. I am going to pass it on to Brandon. Let me stop my share. And Brandon, how you doing today?
I'm doing great. Thank you for having me. Let's see. I'll go ahead and share my desktop here.
Perfect. So I'm just going to mute my microphone, and the floor is all yours, Brandon. Thank you for being here.
All right. Thank you for having me, and welcome everybody. So I'll go ahead and kick this off with just a quick overview of who I am, in case you're wondering. Basically, I'm a charter market technician, which means I've got a kind of a master's degree in technical analysis. I've been studying the markets for over 30 years. Actually, almost 30 years, actually. I got started in 1996. I started off as a retail broker, moved into back office operations. So I kind of saw the front end, the back, and how things work behind the scenes, if you will. And then moved into private sector where I was a private hedge fund manager. There's a private fund, closed fund. Traded that for a little while and then decided to get out of that. I ended up getting into, well, just traded for myself. I primarily focus on futures and options. I do a little bit of Forex trading as well, not too much on the equity side, but mostly futures. And I do more advanced trading, which we're going to talk about here, which is called futures spread trading. And I'll talk a bit, obviously, we've been doing that in the series, and I'll continue that with more practical application. Um, and I got in the education realm as well in about 1999. So I, kind of use that to help me maintain my skills, if you will. And it's also a lot of fun to help other people to learn how to navigate the markets properly. So we're going to go ahead and jump right into it. I'll talk a little bit about some of the resources for Futures Plus and also for the option strategies that we're going to be discussing. We've been doing quite a bit of these in the masterclass here, and basically there's plenty of information available, and also We'll talk about where it can be found. Obviously, TradeStation has numerous resources available for you. And of course, you can always email TradeStation if you have questions about this presentation, about Futures Plus, or about any of the trading you're doing in options on futures or future spreads. We'll talk about those spreads themselves and more or less, not introduction. I'm going to do a quick, brief review, but for the most part, moving forward into how we actually apply intra-market spread trading and intermarket spread trading using TradeStation's Futures Plus. And then we're going to shift gears and go into how we trade options on futures. And for the most part, it's going to be very similar to how you would trade them in equities or index options or ETF options. Futures options, the mechanics are very, very similar. The makeup of them or what they represent are just slightly different. The underlying security is a futures contract rather than shares of stock. But other than that, for the most part, you would apply very similar techniques, if not identical, to trading the options on futures as you would trading options on equities, as I mentioned. So first, in Futures Plus, when you go to TradeStation, there's actually a Learn tab on the home page off to the right, top right. If you go onto the home page of TradeStation, you'll see under Learn, there's a section for Futures Plus. And there's three different areas there. You've got the introduction, and there's the link for it as well. So if you were to go to that, see if it lets me follow the link. There we go. As I pop out, and right here you can see using TradeStation. If I scroll down a little bit, you'll see Futures Plus. There's the introduction along with the courses. There's actually quite a bit of information that I believe Jesus put together and his team has created to help you learn how to use this. So again, in the courses, if you click on that one, you'll see navigating the Futures Plus, trading options with the Futures Plus, and so on. So there's plenty of information there for you. Additionally, there's quick tips, and this is what they call a quick start program, where Jesus, again, and his team has put together these quick tips to teach you, managing orders and positions, trading future spreads, which again, we're going to talk about today as well. And I'm going to spend more time on that, but I just wanted you to be aware that there's a lot of information, a lot of resources if you have questions. And of course, you can also email or talk to your representative at TradeStation as well. So another thing before I go any further is if you go out to TradeStation, another area, if you were to go under Learn, again, you can go to Learn, and under Home, there's, using TradeStation, getting started, all that stuff. But we also have Options Education, which we'll get back to in a little bit. But under the Options Education Center, even though it apparently focuses on options on equities, these same strategies, most of them, not all of them, but many of these strategies can also apply to options on futures. So if you wanted to look at doing a condor, an iron condor, let's see, I think there's condors, full spreads, ratio back spreads. There it is, iron condors. We can click on that. And if you have questions about the strategy, how it works, how to apply it, right here, you can go ahead and watch the videos. There's articles on it, and there's even a webinar that was put on how to apply those in the markets as well. Some of those were done by myself. Some of those were done by other guests from the OIC and other places. But these strategies can apply just as easily on the futures markets as they do on the equities markets. And the only difference is the platform that we use is right here, the Futures Plus, versus using the regular TradeStation platform. So plenty of information out there for you. Again, we're going to go back to futures spread trading, which now we're away from options. When we talk about futures spreads, we are only talking about options. I'm sorry, not options. We're only talking about futures and trading a futures contract versus another. So intra market, we have inter and intra, and the difference is what it is you're trading. Intra-market spread trading is simply the same security with different months of expiration. So if we're looking at, say, crude oil, we think that crude oil is going to be going up in price, you could just go out and buy the futures contract and profit from the upward move. Or you can put on a bull spread on crude oil, which would require you to buy the front month contract, which has the most volume, and then sell a back month contract. And you might be thinking, okay, why would I do that? I'd be making money, but also losing on the one I'm short if the prices both go up. Well, one will move faster than the other. And that's what spread trading is. We're trading the spread or the price difference between those two related securities. So in this case, if the front month moves up faster than the back month, you'll actually make a profit. The advantage of this, as was discussed in the earlier videos, is that the margin requirement is much, much lower, and you have a built-in hedge if the prices were to go down, because again, you're short on one contract while you're long on a different contract. You have a little bit of protection. Okay, you're not completely protected because you can lose money in spreads. You have to be aware of that, but you're going to have less risk than directional trading. There's still risk. You'll have a lower margin requirement, and your rewards will also be lower as well. You can't have less risk without less reward. They go together. So if we are bearish, we could do what's called a bear spread, which I'll get to in a moment. But again, we're trying to profit from this bull spread based on an upward move in the underlying security with the lower risk and lower margins. And we can lose money, as I mentioned, if it goes against us, if the spread narrows instead of widens, as they say, or if both prices go down and the front month drops faster than the back month. So basically, if you guess wrong in your analysis. So the reward obviously is if the front month goes up faster than the back month, we profit. And looking at FuturesPlus, if we're looking for an intra-market spread, there's several different ways of looking at these. I happen to have created a little workspace here. I can actually go in and create an intra-market spread. These are inter that I'm looking at right now, but it's an intra-market spread. I just look for the instrument. I mentioned crude oil, so I'll type in CL. Here I can go to crude oil spreads on the chart and hit enter. It'll give me a list. And we're currently looking, let's see, February, March. I can change these, obviously. February, April, March, April. And let's see, what's today? I think we're getting ready to roll over. You want to be careful and pay attention to which market has the highest volume. That's your front month contract. So I could just go out and look to see what the volumes are on each of these, but typically right around between the 19th and the 22nd of the month, rollover typically occurs on these energy markets. So I imagine the March contract is going to have more volume. We could probably look at these and the individual contracts and the volume if you want to make it easier, but I'm just going to stick with this for right now and do March, April. And basically, this is our spread chart. So you'll notice that the pricing, and actually, let me go ahead and do my settings a little differently here. And the font, there we go, apply. What's going on here? Just trying to get the font there. Oh, there we go. It's on this side. Apologies. I was in the wrong spot there. There we go. Maybe a little bit bigger so you can read that. And the font size on the bottom as well. Now we can see much better. So I'm looking at a chart, as I said, of crude oil. And this is the March contract versus April. I can zoom in a little bit here as well. It's real easy. If I wanted to create a new tab, I just click on the new tab button. But right here, or if I want to change them, I can go ahead and, not there, but if I go to the very top again, where I was, the little hamburger button there, it's like a 3 lines. I call it the hamburger. It's got a little patty inside the buns there. Anyway, if you click on the magnifying glass, you can search for your instruments and change them. If you want to, you can create as many tabs as you'd like. You can change the chart style. I prefer candlestick charts for now. And basically what we're seeing here is the price of the March contract minus the price of the April contract. So you can see right now, the March contract should be at a higher price than the April contract. And I can verify that actually if I go out to CME Group. Under markets, and this is another way I can also check to see what is the front month. So I go to crude oil, and under quotes, right now we're looking at overview, but under quotes right here, I can see that, yep, I was right. March has the highest volume, 414,000 contracts so far. Meanwhile, the February contract, which you'd think we'd be trading February, we're in January. No, it's always traded 1 month ahead. And the rollover, as I mentioned, occurs typically between the 19th and the 22nd of the month, sometimes earlier. And in this case, the front month is always the one with the most volume, not the one that expires next. Keep that in mind. Front month means highest volume. It's the most active contract. And we'll trade the April against that. That even has more than the February. The February barely has any trading volume left. It's getting ready to expire. So that's one way to make sure you're trading the correct contract is to look at the quotes. We can change this if we want to. Maybe I go to corn. And then right there, corn futures quotes. If I click on that, oops, corn futures quotes. Here we are in the quotes, and scrolling down, I see March, which happens to be the next one to expire anyway, happens to be the front month contract. Okay. So again, if there's any questions as I'm going through this, please ask. And if they're off topic, I'll answer them towards the end. I'll open this up for Q&A. But basically, going back to the chart, there we are. What we can do is with this, again, I'm taking the price of crude oil March and subtracting April. So if I go back real quick before I go forward to the quote on crude oil, here we are. You can see that currently the price of March crude oil is 76.01. We are almost a dollar difference here, 75.09 for the April. Now keep in mind, this is delayed a little bit. It's delayed by at least 10 minutes. However, on my FuturesPlus, that's real time. So you can see they're separated by about 93 cents. This should be real time data of the futures. That's all it is. It's March minus April. That's what we're charting. And we can actually apply our technical analysis here. So if I go to my drawing tools, and I'm going to use a fib retracement. Maybe no, actually, I don't have that set up right now. So I'm just going to use a ray. We have an area of demand. Now, I'm too late to do anything with this, but had I identified this sooner, let's see, there we are. This would have been a trade opportunity. But this is what I would look for in the markets. I would just do charting and identify opportunities. So in this case, we had an area, what I call demand, where prices had based a little bit and had an explosive move. That's the order imbalance right there, the origin of imbalance. Okay, and I've done a lot of lectures and stuff. You can look for it online. I've talked about demand and supply versus support and resistance and how I trade. But basically, this was a buying opportunity. As you can see, prices also did a divergence here. I increase the size. And see, do we have trend line? There it is. Basically, prices made a lower low, but the indicator down here, I happen to use RSI as an indicator, and that actually made a higher low, which basically to me says that even though we're making new lows in price, we were doing it with less bearish momentum, and that's not sustainable. For you to continue and to move to the downside, especially if you're going to where there was previous imbalance back here. And basically what I mean by that, this previous imbalance is where we had very few sellers and lots of buying pressure. I know that because the prices jumped actually gapped and moved up very quickly because there were barely any sellers there. And to attract sellers, the buyers had to be aggressive with their bids. Anybody who was wanting to sell pretty much did right here at the end. They exhausted all the selling pressure right as we came into that imbalance. And we lost our momentum, so prices bounce. So basically, this would have been a buying opportunity, and my target would be my first level of supply. Let's see, can I copy? No, I have to redraw. So I have to be patient with your drawing. There we go. Again, ray. And here. Set this up again. And if you're not familiar with the charting and how to do all this, again, I showed you the resources where you could find how to use this in TradeStation. So this would be my buying area. I would exit prior to hitting that supply. I'm basically looking at a move from about 80 cents up to $1.20 is what I'm looking for. So about what is that, 40-cent move in price. Now keep in mind, we're trading the futures on crude oil. It's the same point value for crude oil as in the spreads as it is directionally. So that would be a $400 potential move. And my stop loss, if I place it below the zone, let's say we're putting it 15 cents below the zone at 65. I'll draw a line for that. Actually, I might still have one ready. No, I don't. Yes, I do. Edit. That would be roughly $150 of risk to potentially make $400. Not the best reward risk ratio, but not the worst either. It's a little over 2 to 1, not quite 3 to 1 is what I would typically want. And the other thing that you might have noticed is I'm not getting out right at the supply. When I trade, the reason why I'm choosing that area as a target is that's where prices are, again, finding an imbalance. Here's an imbalance where there's very few buyers and lots of sellers, right? So if we wait for prices to get all the way back up to the origin of that imbalance, we're going to have a problem getting out because everybody else is trying to exit there as well. And we don't want the competition. We need to exit before we hit that imbalance. So that way there are still buyers there to take away our contracts that we're trying to exit. So I always want to enter at a zone, but exit without the competition just prior to hitting a new zone. So in this case, I'm buying again because we have a positive divergence, which suggests that prices don't have enough momentum, bearish momentum to break down. And I'm going to get out before we hit that imbalance up here where we don't have enough buyers to continue prices above that level. So I'm trading technically the same way I would if I were simply trading an individual contract of crude oil itself. As a matter of fact, let's create a new tab here. CL. Bring up the March contract. And you can see I've created a new tab, and there is the March contract of crude oil. And what you'll notice is it's very similar, not exact. Again, right here's the spread. Here is March crude oil, both on a 4-hour time frame. And I could draw very similar. Whoops. Actually, I had my drawing tool already set. I didn't realize. You have to hit escape to get out of the drawing tool. Otherwise, it stays. But right here, we have an area of supply. Now, this one's not as good because it's already been tested. But the spread looks good. Again, I don't care what the overall market does necessarily, because by doing this trade, I would be going long on this contract, but I'd be shorting the April contract at the same time. So I'd be both long and short with the intention of the overall spread widening. Basically, if this moves up faster, and let me bring up the April. There we are. Then this. Notice this chart is almost identical as well. Again, this is the April contract, and it too looks like we're getting ready to bounce off of an origin of imbalance, but there's a big difference with this one. This is why the spread might end up working pretty well. Again, it's already too late. I'm not telling you to enter this right now. The entry spot is already passed. The reward risk ratio is already shifted. We don't want to get into this right now. But had we identified this in time, this might have been an opportunity. So what I'm seeing here that's different than what I saw on the other contract, first of all, we actually have more momentum, not less. What do I mean by that? Well, let's see, where's the trend line? Here. Here you can see markets are moving down in price. But the indicator is saying, hey, we got more momentum, not less. So what does that tell me? It tells me that this security is weak and is more likely to break down. Now, it is still going up. Why is it actually still going up right now? Well, that's because the overall crude oil market is going up and all the contracts will move the same. You see right here, this is the front month contract. And it too had more momentum to the downside, so no positive divergence. But notice the difference here in the previous touches. you could see the previous touches, we barely got into the zone here, barely got in here. Now we're obviously a lot deeper. This is a stronger security than this one, the April. Come on. There we go. Notice here we actually went in. There we went in deeper. Here we went even more inside the zone. This is showing more weakness. So again, I don't care if they both rally or not. What I care about is that the March contract goes up further and faster than the April contract. Even if they both continue to move down, as long as the April contract moved down further and faster than the March, I'd still profit on the spread because the price between the two would still widen. So I'm using the technical analysis on the actual contract, or sorry, the actual spread chart. Again, this is simply a visual representation of the price between those two securities. That's all. Now, if I was bearish, expecting this to go down, or if I just simply wait until prices get up to the supply zone, I could potentially sell this and turn this into a bear spread. And basically, let's see, can I do it here? I have my trade box right here, enable trading. I should be able to trade directly from this. Now I forgot how to open the thing. Again, you got to go ahead and learn all the nuances of the program. I could actually also, let's see, widgets, MD Trader, which I didn't have open. Search for instrument, again, CL, crude oil spreads. Enter. And we're doing the March, April. There we are. So if I'm interested in trading this, let's say I want to do 3 spreads. I could do limit, or I could actually bracket my order as well. So my initial order, let's say I want to do I'll do limit order to get in. And again, I'm looking to buy. My profit target, this is number of ticks away. And I was looking at about 40 ticks. We talked about that previously. Just simply, well, it's going to be less than 40 ticks now because obviously I'm getting in too late. But if we were getting from 95 to 120, 25 ticks. So that's what I do there. Stop loss. How big of a stop loss do I want on this? Well, originally I was looking at 15 ticks. I'll just keep it small. Let's do 10. It's 2.5 to 1 reward to risk. Now my stop order type, I actually need a stop market. Okay, notice I changed it from stop limit to stop market. You don't want a stop limit to get out. Okay, the reason why is if your stop gets triggered, a limit order would be put in to exit. And if prices keep going down, you'll never get out. Your losses would increase. Okay, so I can set that up. Let's see, I can set up a trigger for this too. Let's say I don't want this to happen right now. I could wait to put this in. Actually, I'll do that in a moment. I'm not going to get to that yet. So if this is my long entry that I want, let's see, bracket. I can even set up a template as well. And I believe, there we go, confirm buy with the bracket. And it's the 3 contracts that I had set up. And I should have that order ready to go. And let's see if I go over to my widgets, bring up my order book. There it is. There's my order pending. And none of them have been filled yet. Let me zoom in a little more. But there's the order. If I need to manipulate or change anything, I could do that as well. But it's showing me the entry order and the target and stop right there. There's my target, the limit order. There's my stop, the stop market. So pretty simple. And it says it's working right now. I have a trigger price at 84 because I used a limit order. And I'm sorry, that's a stop market order. Is that my entry order as well? No, there it is. I can drag and drop, I believe. Let's see, did that change? No, but I can also edit and change the orders as well. So edit order. And right there, which one is this? Make sure it's my entry order. Limit. Working. It's showing 119 for the entry, which is not correct. So again, I need to edit that, obviously. Yeah. Let's see if I move that down. Nope, that's the target order. That's a stop market order. So again, I can just edit the order. It should be, oh, there we go. This one. So if I want to, actually, what I'm going to do is just change it to a market type if I can. Working orders. Change. Nope, cancel. Probably easier. I mean, I can put them all in together, but I'm just changing this to a market order, I believe. No, it's not letting me do that right there. So anyway, I got to work a little bit more on this. I apologize again. I got to watch some of Jesus's videos to get a little more versed in the platform itself for the order routing. But I was able to place an entry order, and it looks like I put it down here at 84, and I just need to get that moved. That's okay. But what I wanted to do was the next step. If I was bearish instead and wanted to get in on the short on this when it gets up to my sell area, that's where I can actually put in the trigger for the entry as well. So in that case, I would go ahead and click again, bracket for the order. And the other thing I could have done too, which actually let me do that first. If I go back again to my orders, that's not it. Chart. Oh, I must have closed it out. So let me open up the widget again. Order book. There we are. And I'm going to cancel the order. It's only showing me edit. Why not cancel? Yes. Oh, there we are. That's what I wanted. Cancel. Cancel all. There's a button right on that matrix right there. Or yeah. So anyway, again, if I want to get in, an easy way to do that on the long side, I'll just go ahead and do a market order to get in, buy. Confirm buy, and that should have gone through. It's not showing in my order book. So it should be showing in my positions now. And I have other contracts in as well. But I do have the February and short on the March. So I've got 2 long, 2 short. So there's my spread. So now and it shows my average buy. Actually, it looks like I did one more and I had some average buy before, but that's okay. So what I could do now is go back and on this, bring in the bracket and just put in the stop and target. But if I want to do the short, again, I can go in and do the bracket, or I can just put in a limit order to enter. And let's see, it doesn't let me do a market order on this, does it? No, it's just a bracket order, unfortunately. And I can create a template as well to save this. But in this case, if I'm shorting at the 123 level when we get there, what I can do is put in the trigger saying, if touched 1.23 last traded price, okay, or it could be bid ask, whatever, but LTP is last traded price. So that way this will get triggered once prices get up to my area. It'll go ahead and put in my entry, and I can put in my target, my stop loss as well. I can actually probably just put in a limit order for that as well. So that's pretty simple for an intra-market spread. Obviously, if you know the platform a little bit better, just practice with it first to get used to all this. Now, if I want to do inter-market, so I covered a little bit of bull spread. For a bear spread, again, you're selling the front month while buying the back month. And you're doing that because you're expecting that front month to go down faster than the back month. And the risks, obviously, if the back month falls faster than the front, then you lose. Or if they both go up and the front month goes up faster than the back, you'd also lose. And I would be doing this position again based on my technicals if I expect prices to drop once it gets up to a high. We can also look around to see, I don't know if there's anything else that'd be tradable right now on the bearish side. Oh, you know what? Hang on. I'm going to bring in a new tab because I don't want to lose this one. Actually, no. I'll just change this. I'll go back to one of my other tabs that I'm not using, this April contract, and simply change it. So I'll go ZC, look at corn, spreads, enter. And you can see there's other types of spreads that we can do too, but typically I'm doing the calendar. And let's see, we got March, May. So we'll look at that. And let's go to a daily time frame. Well, unfortunately, again, kind of missed out on the opportunity already, but there was an area right here of, again, basing in price equilibrium leading to the origin of an imbalance where prices were dropping dramatically. And I could have put in a bear spread. There we go. Again, bring up another ray. Edit that. And you can see right here, when we got up to -8, and remember, this is the price of the March contract minus the May contract. So the May corn contract is higher in price than the March contract, obviously by 8 points. Okay. So if we had seen this at the time, again, it's too late to not try to take this trade now, but if we had seen this at the time, could have identified a sell opportunity for a bear spread. We would be selling the March contract, the front month, and buying the May contract, the back month. As the prices are moving down, what this is showing us is that the front month contract is losing value compared to the back month. Instead of being 8 points below it, now it's 9.5 points. These are trading in eighths, or actually in quarters. Sorry, quarters. Well, that's it. Take it back. It's actually eighths, but it's shown in quarters. Um, well, oh no, there is a little bit of a difference in some of these. What you'll notice, probably not on here. No, it's actually only showing the quarters. It is actually traded in eighths, but it's 2/8, 4/8, 6/8. That's how it's shown on the chart. Okay. Anyway, we could have sold when prices got here, and it's just nothing different than a regular trade. If I were to put in, again, the actual spread here, this is the crude oil spread still. Oops. So I have to change the contract. I can actually search for instrument, ZC, corn spreads, enter. It brings up the menu, March, May, and there it is. So if I'm looking to sell this, again, I would not do this now. It's already a little bit late, but I could put in this order, and I can also put in the bracket order. And I'm sorry, that's an OCO to put in a stop with the entry. I wanted the bracket. There we go. And there's other types of orders. Again, if you have questions on them, there is a little support question mark right here, and you can actually get information on all those types of orders as well. Of course, you also got the resources I mentioned on the website earlier. Additionally, before I would get into this, I would look back to see where is my nearest buy or demand zone. We already tested one that was right here, which is actually a good thing if you're looking to short, because that would have been the target, but since it's already been tested once, we're likely to go down to the next area. So I would keep looking back until I find my target. And suppose I don't have one. Let's see. Just going to switch to the time frame. Nope, that's 1 minute. Nope. Daily. Try to see if I can do a weekly chart, but I don't know if I can. So instead, what I can do is bring in a different technical tool. You have the little, I can't remember, compass. That's what that's called, the little compass. And right here we have the technical indicators. Actually, no, that's not what I want. I want a drawing tool. I want Fibonacci extensions or projection. And I can project for my potential targets. Because again, we've already exceeded the nearest demand zone. Now I can target. Oh, that's not what I want to do. edit that. And we have 61.8, 100%, 127.2, 161.8. These are Fibonacci extensions that give us probable targets for the price to move to. I can change the colors so I can see the different levels. And there we are, 61.8, target 1, 100% target 2, 127.2, target 3. So I have, if I had gotten in time, I could have targeted those levels, again, placing the order just on this matrix, or as it's called here, MD Trader. Okay. So that's an intra-market spread, either bullish or bearish. You're simply trading the same contract against each other. Another way of doing this instead of technicals is we can use what's called seasonality. And I mentioned this before. You've got seasons inside of these securities. Every single one of them goes through seasons. And, the stock market does that. We have the Christmas rally, or Santa Claus rally, whatever you want to call it. You've got sell in May and go away. There's all these sayings about the markets because of the overall seasonal moves that typically happen. I talked about this before. The one disadvantage of seasonality and trading that is you have to pay for seasonality. You have to pay for the information. So I subscribe to a couple different resources. I'm not going to go into those too much in detail right now, but if you have questions about those, you can always email us to get more information. I forgot the email address for this is education@tradestation.com. Jesus will give you the information in a little bit. You can always get a hold of them if you have questions. But basically, again, for intra-market, you can use seasonality or you can use technical analysis. Intermarket, same thing. We can also do seasonal trades based on seasonal moves in the markets. And just to give you a quick taste of what it kind of looks like, I actually subscribe to MRCI. I'll just show you. And I'm going to go to previous trades, not to show the newest ones, but if we go back to December seasonal spreads, this is kind of what it looks like for intermarket, where you can see, I'll zoom in again. They suggest possible opportunities: buy February gasoline, sell crude oil. 100% win rate over the last 15 years. Now, does that mean it's always going to win going forward? Of course not. Some of these are as low as 80%, but typically the win ratios are pretty high. Another 100% are right there. But going back to the first one, we were just looking at, that's gasoline versus crude oil, or sorry, heating oil. They happen to be the same months, but they do not have to be. Okay, sometimes on the intermarket spreads, there will be different months. For instance, gold versus silver. There's February gold versus March silver. Not the same month, not the same security. It's intermarket spreads. But it gives you an idea of what might be possible. So looking at that one intermarket spread, that was July gasoline and heating oil. I can go back, to my platform. And in order to get the spreads, we can use what's called auto spreader, as you can see here. And I can create a spread to look at, and I can do it leg by leg. So the first contract, and by the way, I've got to give it a spread name. So I'm going to call it, what do we have here? We were looking at, forgot it now, gasoline versus heating oil. And it was July, right? Yes, RBNHON. So we'll say gas versus oil, July. That's my name. Spread formula, contract number 1. I just find it, RB. There we are. And July. It's contract 1. Contract 2. HO, heating oil. Again, July. Click on it. Ratio. Now, I am just doing a 1-to-1 ratio for these. Some of the contracts, we talked about this before in the intramarket education for the masterclass, you have to do a ratio of maybe 2-to-1 or 3-to-2 or 5-to-6, whatever it may be. You need to be delta neutral. You can actually find that information, again, by watching the video. It's also on the CME Group website. The multiplier, if I keep it at 1, that is going to give me a chart. That's no problem to use. But if I want to actually know exactly how much I'm going to make or lose, I have to take whatever that chart shows and multiply it by the point value of $42,000, because each of these contracts has the same point value. If I was doing a different spread, let's say I was doing heating oil versus crude oil? Well, I would go here, CME, and under this column, maybe I choose crude oil July. Now I have crude oil versus heating oil, 1-to-1 ratio. However, the multipliers need to be put in because they're not the same point value. 1,000 for heating oil and negative 42,000 for the heating oil. That's 420,000, sorry. Isn't it? Yep, that's better. Apply, save. Nope, I think the apply automatically saved it. So now, if I go to my list, I should be able to find it. But I misnamed it, I forgot to change it. And there's my local spreads. Oh, maybe I didn't save it. So again, I'll just recreate it again, but I'll do the right one this time. It was RB, July, heating oil, July. And again, just 1-to-1 ratio, it's fine. I need the name, and this was going to be RB, BSHO, July. And I can choose to share it with everyone or just keep it private on mine. I'm just going to keep it private for me. Again, if I'm doing an intermarket spread with both the tick values are the same, I don't need the multiplier if I don't want to, but I actually don't mind using the multiplier, and here's why. I'll show you when I go to the chart of this one. There we go. So we'll save this. There it is. And now I should have it on my list somewhere. I'm not sure, there should be a way to get rid of the expired contracts, but I don't know specifically how to do that. Let's see, where are you? There it is, RBHO July. I can click on this little window popper and I can open up an MD trader to trade it. I can also open up a chart or just add it to one of my charts as well if I choose to. But right here, I just open up a new chart. Unfortunately, defaulted to 1 minute. That's not a big deal. I just change this to my daily or whatever time frame I want. Let's do a 4-hour. Just type in 240, hit enter, and there's my 4-hour chart for that gasoline versus heating oil spread. Now, the reason why I chose doing the actual values, the notional value, is because if you take the side, this side right here, the scale, that's actual dollar movements. If I had only done a point value, watch what happens. I'll actually recreate this. So again, RB, this only takes a moment, July. Actually, I'll do it this way. No, I can't. I got to do the auto spreader first. I forgot. Intermarket, you got to create the auto spreader first. So again, RB, July versus HO, July. This is RB versus HO, July. Point value. Let's change it, the name there. Hit save. There we go. And there it is. So I'll just show you them next to each other. Open chart. And again, 240, same time frame. The chart will be identical in shape. The only difference would be the values, negative 0.0509, negative 2137. So in this case, if you were to try to figure out how much profit or loss you would have to take the difference and multiply it by 42,000. Here, I just take the difference, and that's the actual profit or loss. So it makes it a little bit easier using the notional value on the charts. Personal preference, whether you want to or not. If you were doing two securities intermarket that have different point values, you must use those. Now, to trade this, it's the same. What's the widget called again? I keep wanting to call it the matrix. It's the MD trader. You can still use the MD trader to trade this. And there's other ways of doing this as well. But, simply put, to trade the futures spreads, I either use technical analysis, like we were showing here, looking for supply and demand and trend, or you can also look for seasonality. And unfortunately, like I said before, For seasonality, you have to use some sort of a service typically to pay for the seasonal information. So that's a little bit on the future spreads. Unfortunately, running low on time here, but uh, yeah, pretty much covered all that. And I was showing about margins, things like that, looking at the charts, and we did some analysis. As far as the options, we're using the same platform. You may want to change your workspace though. And there are workspaces. If I go to recent, there's special ones that I've already created. I've created my own that I like. So if I want to trade options on futures, I'm just going to go ahead and switch over to that and create that workspace or open that workspace, close out a few things. But again, the main difference between futures options and stock options is what you're trading, the underlying. I mean, they're both options. Calls are calls, puts are puts. But the underlying security that's deliverable or not, it would be cash settled if it's not deliverable, is a futures contract. And there's two styles of exercise. In the US, when you're trading the ETFs or stock options, you have American style options, meaning you could have an assignment when you're short at any time. If you're long, you buy an option, you can exercise at any time. In the options on futures, some of them are American, but many of them are also European style, meaning there's no early exercise or assignment. It only happens at the expiration. Well, if you were to trade index options, most of those are European style, but for stocks and ETFs, the rest of those are typically American style. Settlement, well, basically what happens is for futures, you get delivery of a futures contract or it's cash settled. It's not shares of stock. It's definitely not 100 of them. It's just one contract for one option. And of course, you use the point value for the futures for the values. And they're open almost 24 hours a day, which is kind of nice. With the stock market and the stock options, you can only trade those during regular trading hours from 9:30 a.m. to 4 p.m. Eastern. And pattern day trading rules don't apply to futures, nor do they apply to the options on those futures. So we can apply the same sort of strategies that I mentioned. If you go to the Options Education Center, if we're looking at an opportunity, say we think that the market's going to stay steady for a little while, we've had very high volatility in price movement, but we're expecting it to base a little bit and quiet down. Perhaps I want to employ um, an iron condor. Unfortunately, in this platform, I can definitely trade and practice, but there's some tools that are not available. And one of those tools that's not available in the simulated mode, let's see, does it show it? The strategy creation. So you can see it's not supporting simulation, unfortunately, but you can still practice and put in trades just with individual legs. But right here for the strategy creation, there are templates you can use to help you out a little bit easier. Again, it's only in live though. So if I was looking at doing some sort of an iron condor, let's see, it's not on this page. There are 3 pages. There it is, iron condor. I click on that and I can build the iron condor. At least I can see the shape that I need, sell, buy, sell. Okay. Or I can see reverse this. If I want to reverse iron condor, I can add legs, all that good stuff. The only thing I could do with this is if I go here, once I create that position, I can put it in a watch list. But then again, if I want to actually trade it in a simulated mode, I just have to leg in, unfortunately. That's the way it works. So for instance, let's see, I think I have NASDAQ quotes up. There we are, March 2025. It's uploading right now. It's taking a little while, unfortunately. Let's see. NQ, March 25. Now, for trading options on the futures, I'm still going to chart the futures itself, underlying futures contract. But let's say I was bullish on the security. Let's go down to 60 minutes, see what we got. Anything? Here we go. It takes a moment for it to load. So, for instance, if I was looking at the security, I'm not saying this is going to be a good trade right now, but just as an example, something to look at. Let's say I was bullish on the security, expecting prices to rally. if it bounces off demand right there. I'm not going to detail it too much right now, but that's it. Let's say we pull back and we bounce off 21,300. Well, I could do a couple different strategies here. At 21, there we go. It's finally populating. 21,300, I could buy a call, right? Or I could also create a bull call spread. And again, for the bull call spread, I would have to leg in a simulated mode, unfortunately, because I can't do the strategy right here. If I did combo, let's see if it lets me build. To be 21,300. Call, and nope. Buy. There it is, 21,300. And I can change the one I want to sell. There it is, another call. Let's say I expect this to go up to, it's just not, there it goes. Yeah, 22,000. Perhaps I sell the 22,000 call. There we go. And that's a bull call spread, debit spread. So unfortunately, like I said, strategy creation is not allowed. I could see what it would look like. There it is. Buy the 21,300, sell the 22,000. But I can actually put it into a watch list at least. And there it is. My watch right there. And then if I wanted to actually trade it, I would simply put it on the position this way. I could just do a market order to enter. Just do one for now. Confirm. And let's see, positions. There it is, 21,300, long, one call. And it shows my average buy price, how much profit or loss I have right now. And now for the second part, I can go out to the 22,000 call and click on the bid. And then again, I can see market order, sell, confirm. And now I actually have my spread. And there it is. Again, in my positions, on my positions tab, I've got the bull call spread. And I'm losing $100 right now. But that's okay. I just put it in and I'm basically down the spread and a little bit of movement. But if prices continue to move up, obviously I shouldn't be doing this right now. I should have done it when it was at the demand zone, waiting for it to bounce. It hasn't gotten there yet. But just to show you an example, I can actually practice just by legging in on the strategies. If I'm not sure how the strategy should look. So for instance, once again, I can bring up the options, strategy creation. And let's say we're thinking that the Nasdaq's going to sit still for a little bit. Well, I want that iron condor, perhaps, or maybe even a butterfly. I simply bring this over. I'll do iron butterfly. Okay. It's actually going to be buy, sell, sell, buy. We're going to buy options, let's say 22,000. And I can do the 21,300 again. And we'll sell the at the money options 21.6. So for this one, I might go to the 21,300 again, 21,300, that is. There we go. And I click on the little, I don't know if you saw what I was clicking on there. There's a little magnifying glass that pops up. And I can go again, CME option N and look for NQ. There we are. And we're dealing with March. I can actually click on any one of these just to get it loaded. And then change the numbers individually. It's a little bit easier sometimes to do that. And I was using 21,600. There we are. I want the same option. And N. Click on any of these for right now. And I accidentally did put, so I click on that C and change it to a P. It's very easy. It toggles. Same thing with the buy or sell. They toggle as well when you click on them. So once again, it's 21,600. I'm selling both of those. And then finally, I have to buy. So I go find the NASDAQ and Q, click on any of these securities, doesn't matter. Then I change it to specifically what it is I wish to trade. 22,000. Call. Buy. And I can watch that. And there it is added to my watch list, I believe. Oh, that's strategy creation, sorry. Where did my watch list go? Oh, it's right here. Oops, strategy creation. There it is. No, it's positions. It's one of these widgets. There it is. Is that it? No, that's the options chain too. Well, I might have closed it. So in that case, watch list. And for some reason, it's not showing on this one. So I do have a watch list here somewhere. I just got to find it. It's underneath. Oh, it's saying duplicate instrument, so I didn't put it in. What did I duplicate? Nope, that's the same one. Oh, that's why. So for the butterfly, I don't do them separately. I'm just doing two. There we go. Now it should go for a watch list. And there it is in my watch list. That's what happened. I didn't put together the butterfly correctly. And there it is. 21.3, 21.6, 22,000 and the watch list. But if I want to trade it in a simulated mode, unfortunately, I have to leg into each of these. I would leg in on the long ones first and then the short, because I don't believe it. Well, it might let me go naked on the shorts, depending. But unfortunately, in simulated mode, I have to do them separately. There is a way of putting in all the orders together, and Jesus had talked about that in some of his videos. I have run out of time, unfortunately. So if there's any questions, please let me know. I want to thank Jesus for the time that you guys gave me here, and hopefully I gave you a little more insight into some of the spread trading futures and options on FuturesPlus.
Hey, Brandon, well, thank you. Thank you for spending this time with us. Yeah, there is a lot to learn on the platform, and there's a lot of functionality on TradeStation FuturesPlus. So for any questions on platform functionality, please continue to join us in one of our sessions. We'll gladly go over those features. Brandon, again, thank you for your knowledge. Thank you for your expertise. We had a good class today. This will be recorded and it'll be part of the 6-part series. I think it's a little bit more than 6 parts because I think we did one of the classes in 2 parts and there's an introduction. If you click on that link that I shared in the chat, you'll get access to all the recordings. And in about a few days, once this goes through production and compliance revisions, then we'll post it onto the playlist as well. So thank you guys for joining me today. And Brandon, please look at our events calendar to see all the topics that are upcoming, and I want to invite you to join us. So thank you so much for your time. Have a wonderful afternoon and great having you. Goodbye, everyone.